Hi, everyone. It's Helen from S&B Deal Hunter. Today we have Patrick Dichter with us, an acquisition entrepreneur who's acquired three accounting firms. His company, Appletree, provides quality bookkeeping and tax nationwide. I'm very excited to hear Patrick's story and learn from him today. So, Patrick, great to have you on.
It's great to be here. I'm super excited to chat with you. I've been, following all the good content you put out on Twitter and your newsletter, and hopefully it can add some good value to your audience. So
Yeah, really, really excited. I guess like to start off, what's your background? How did you sort of get into buying accounting firms?
yes, I'm not a trained accountant. So
Oh,
my winding path was undergrad, international business, finance minor. I got my MBA. So I took some accounting. I've always been into numbers, and then I worked in sales and marketing for a long time at a digital marketing startup. And then for 3 years, I was doing small business consulting and coaching. And all my clients would have terrible bookkeeping. And I was always referring it out. And it was a game changer when they'd have like good, clean books to, help them with running their business and evaluating it. And I started to hear about people that buy businesses. And I was like, I'm sending away a lot of accounting work. What if I try to buy an accounting firm? And so I explored that. And the more I looked at it, the more excited I got. And I did a, self-funded search and I searched for about 10 or 11 months and I bought the first firm, Appletree, at the end of 2021. So I'm a little over 2 years into it now, and I've done a couple more acquisitions since then.
that's really cool. Where did you find your first deal? For the first deal, where did you look? 10 or 11 months, was it mostly on market, off
I
market?
broke like every rule in the Harvard business book. They're like, don't do proprietary, don't buy small, don't look at one industry, like don't look at one geography. And I broke all those rules and like it worked out. But at the time we were living in Colorado and we were moving for family reasons to New England. So I live in New Hampshire now. So I was looking at firms in Colorado and in New Hampshire. And as a non-CPA, the business brokers in the accounting space like weren't open-minded to me as a buyer. They were just like, oh, you're not a CPA? Like, nope, we don't want to talk to you. So I ended up like having to do my own proprietary outreach and like sent 500 emails that led to 20 seller calls and eventually the first deal that I found. Um, so that's kind of how I ended up having to do proprietary outreach, and then it I figured it out, and then ultimately bought the first firm, and then everything changed once I bought the first one. It got a lot easier to do the additional tuck-ins after that.
Oh, that's super interesting. For the second and third deals, I guess they had much less, even though you weren't a CPA, I'm sure much less many fewer objections, if you
Yeah, I
will,
mean
right?
everything gets easier. Like
Yeah.
you know meeting with sellers is easier, dealing with the bank is easier, like getting around brokers, like also just knowing what you'd be willing to acquire or not is like totally different. So
Yeah,
yeah.
I guess the obvious question that I have and a lot of people I'm sure have is, can a now what is it like for a non-accountant to buy an accounting firm?
Yes.
Um, I want to hear
So
more about that. Is that something you recommend for other people? Yeah, definitely want to learn more.
so let's talk about the like licensing stuff first. So I a non-accountant can buy a professional services firm, and that's what a lot of accounting firms are. They're licensed as professional services firms that happen to do bookkeeping and tax. So most states, that's the way it goes. Um, if it's a licensed CPA firm, it probably needs to be bought by a CPA. And there's different rules in each state. Like in Texas, a CPA firm has to be majority owned by a CPA, but you could have like a 40% owner who's non-CPA. So it depends, A, how the target is licensed that you're buying, and then B, like your state. But I'd say more often than not these days, there's a lot of firms that are, accounting firms that are good, solid businesses that are operating and they aren't licensed as CPA firms. So, that's the one big caveat. And then there's definitely a lot of risk, like as a non-CPA buying it. Like if you can't be the backstop to do the work, or um, if it's a team of five and like two people walk out the door, like you're kind of screwed. So um I'll say that. But I definitely think it checks a lot of the boxes that searchers are looking for, right? Like recession resistant, sticky clients, low capex, recurring revenue, good tailwinds, like check, 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 check. Like checks all those boxes. And there's a lot of like private equity coming after PE and a lot of a lot of private equity coming after accounting, and there's a lot of consolidation going on. So you have to try to buy a certain type of firm as a searcher if you're not an accountant. And I definitely think you can get skilled up on bookkeeping quickly and like be able to do that work and like know what you're talking about. But tax is just something where like you can go and get your enrolled agent credentials and do the tax returns, but it's going to take you a while to be able to like really hold your own if you're going to do the billable work. So myself, the first firm that I bought had a team of 12. And the owner had done a pretty good job of like getting himself out of most of the, client relationships. So they had 60 small businesses and he was only managing two himself at that point. And so it was a little bit more of like a turnkey operation where somebody could come in who is a non-accountant. And so now, I don't do the billable work. I focus on sales, hiring, recruiting, tech, and then I let our accountants and tax pros do the billable work. Um, so that's my long answer of like, what is it like as a non-accountant to buy and run a firm? So
I mean,
yeah,
and look, it makes sense. There has to be some sales and marketing as well to get those clients to begin with.
yeah.
That makes sense.
I tell people I think it's like my biggest strength and my biggest weakness most days. I think the reason why most accounting firms don't grow and a lot of their clients are frustrated is because it's a technician who happened to open a business and they don't focus on running the business, right? So that's what I focus on is like the client experience and our hiring and like improving our processes. But there's definitely times where it bites me where I don't scope a client properly or um, maybe I try to push change too fast and my staff like is like, hey, like slow down, like we don't want to do this. So it's kind of give and take, But
You mentioned in your first deal, the owner did a good job of kind of outsourcing his day-to-day role or not maintaining those client relationships. Would you say that's common when buying an accounting
no,
firm?
no. So the profile you'll see, like most firms that you're going to see for sale are like 800K in revenue and like 350K in SDE. And you're like, wow, that's like pretty good SDE. Well, the reality is it's one tax pro or one CPA with like three or four admins or assistants. And like, you do not want to buy that firm, right? Because, as soon as Bob leaves, like the thing goes up in flames and like all the clients are used to interacting with Bob. So, no, the norm is like a lot of owner dependency and like they're super efficient as an owner and they do most of the work. So I could definitely talk about like if I was looking for a firm, like what are the things that I'd be looking for, but that's
Yeah,
not
no, that was going to be my next question, I guess. Just what are the common, I guess, red flags when you are, looking at accounting firms? I'm sure owner dependency is one of them, but yeah, and
so
what do you look for?
I'll tell you like the must-haves and then I'll tell you the nice-to-haves. If I was searching, the must-haves would be like over 250K of SDE, at least 20% of revenue being bookkeeping. Um, and if they do tax, at least two tax pros that are going to stay on post close. Like those are the musts because it's going to tell you that there's like more business clients than individual. Um, it's going to tell you that there's like more recurring revenue monthly versus like just a bunch of tax. And if there's two tax pros that would stay on post close, it's like a little bit more of a resilient firm where, you know, they're signing off on the tax returns and like you'll have time to staff up with other people. So if it was like only one tax pro staying on post close, like I wouldn't touch that. So those are the must haves. The nice to haves would be like if it's a modern or cloud-based firm where like they're not using paper and everything's done online. They do monthly subscription style billing instead of like after the fact when the tax return is done. Um, the other nice to haves would be like if they have a good mix of services like bookkeeping, tax, payroll, it usually means it's a more sticky client. So those would be like the nice to haves, but those modern firms that are like subscription style, like they don't come up for sale very often. If they do, there's like it's super competitive to be able to get them.
Yeah, no, I've seen the ones that are often like very well branded and look like they're out of San Francisco. Is that what we're kind of talking about?
Yeah, or just like the the thing that you always see on the surface and get excited by is like, again, another example would be like a 2 million revenue firm with like 8 team members, and then you see that the SDE is like 700K. You're like, wow, like that's a really good margin. Well, you dig into it and then you find out like it's a lot of paper, and like the two other tax pros are retiring, and like, you know, if you look at the cash flow on a monthly basis, they're doing the tax return for people and then getting paid. And that, like, that's not the type of firm that, is kind of the ideal firm that you want. But sometimes, you can't always find the perfect deal, and you might have to find something in between. And then over time, you're trying to modernize it and improve it.
It makes sense. And what about some just common red flags when it comes to buying an accounting firm?
Red flags would be, so one trap I think a lot of people say is they'll like, well, I'll take this old school firm and like improve it and raise prices. And like, no, like that is not what you want to do, because by the time you go through all those changes and like get it from a super old school firm to a modern firm, you're gonna churn through the staff and churn through the clients. So um, the big red flag would be trying to like take a super old school firm and trying to modernize it. Um, you just like you're gonna pay for a $2 million firm, and like 2 years later you're gonna have like 800K revenue. Like it'll just like
Yeah.
clients don't like change, staff don't like change, and the tech is like it's a heavy lift. So that'd probably be the biggest red flag, is like trying to modernize something really old school.
No, that makes sense. I guess with your I guess going into just your first deal, how did you finance that first deal and then subsequently your second and third transactions?
Yeah, so the first one was kind of a traditional self-funded search deal, like $1.3 million purchase price, 10% my cash, 15% seller note, 75% SBA loan. The second one was a smaller firm. It was like all seller financing on that.
Yeah.
And then the third one was another one that had a mix of like SBA and seller note.
How was the SBA process for you going through that and any sort of tips and advice on navigating that? And would you do it again? A lot of people are concerned about the PG, the personal guarantee on the SBA loan. What's your general take on that?
I'd say yes, I would do it again. Generally speaking, I tell people like an SBA loan for a business is like twice the work of a mortgage in terms of just like paperwork and how much time it takes. And it's like the most friendly debt that you're going to get on this like risky asset class. Um, Man, hot take. Like if you're not ready to sign the PG, like you probably shouldn't do this. Like that's my opinion, like there are a lot of other people that are like, oh, like don't sign a PG, but it's like if you don't believe in yourself or the business enough, like I don't know.
The red flag as well.
Yeah. Yeah.
Okay. No, I like that. I like that take. No, that's really interesting. What made you decide to go? Was the plan always to kind of buy multiple deals? Did it kind of just happen? Were you growing the business organically as well, or did you just find that it was easier to grow it sort
Okay,
of
so admittedly,
inorganically?
admittedly, I was on the search for accounting firms, and I heard Nick Huber, storage guy, on My First Million. This was before he like was really big, and he talked about like how he'd buy a storage unit, improve it, increase the profitability, do a cash out refi, do the next one, the next one, the next one, the next one. And I was like, I want to do that with accounting firms, like modernize it, improve it, cross sell some other services, get the next one. And then after the first acquisition, I was like, no way, like it's so much work to like go through integration and like figure out a firm. And then I really wasn't looking. And then the second one, they approached me and it was a similar style firm. So that was like an easy integration. And then the third one was just like a really good firm. So I decided to go for it. So my plan evolved. I did think about like doing a lot of acquisitions initially. And then like once I had the first one under my belt, I was like, I don't want to do a lot more deals. So, and even at this point, it does sound like I like want to do a lot of acquisitions. I don't because we're growing well organically and it's just so much work to combine firms. So I'd be open to more deals as long as it's like similar tech stack, similar client base, but outside of that, it's just not worth it to do anymore at this point.
How have you managed that? What does the integration look like for you guys? And have you sort of fully integrated all three into Appletree? You kind of rebranded the latter two into Appletree
Yeah.
as well, or
Yeah, so the integration is super painful because you have bookkeeping software, you have tax software, you have a payroll software, and then you have practice management software, like kind of your internal ERP. And then you also have like your SOPs and procedures for how you do the clients, how staff are trained. So like all those things have to be changed or realigned. So yeah, as I mentioned, the second one was pretty easy because it was similar tools. The third one was a little bit harder because we primarily use QuickBooks Online. They primarily use Zero. Our tax
mm,
software was the same. And then we lead with the tax being kind of the linchpin in the relationship. And this third one led with like fractional CFO as the main thing in the relationship. So there's definitely like trying to learn how to structure those engagements and how to put the right team members on it. Um, but I, I mean, you just kind of like chip through one thing at a time, and some of the integration stuff you just have to rip the band-aid off quick, and then other stuff like you can let it ride for a little bit and then change it over time.
that makes sense. And how have you been? You mentioned the businesses have kind of been organically growing pretty well. What have you seen sort of work, and what were they doing before you kind of you went out and acquired them?
Yeah, so if you haven't heard, there's an accounting shortage, and like not everyone loves their accountant. So there's a lot of demand right now. Honestly, like we get so much inbound for accounting services, and so you're almost just filtering through like looking for the ideal client. So for us, we don't take one-off tax returns. We don't want an individual that just has like a regular W-2 job. We're just after the small business client where we'll do their bookkeeping, their business taxes, and their personal taxes. And we want to work with them year round. So we're higher touch, we're more proactive. We price that between like 600 to 2,000 per month, and that's our flat fee that covers everything. So we're really like we're trying to attract the ideal client, and then the growth has come because we've like improved our branding and improved our digital marketing to get more of the inbound. And then my strong suits are like B2B sales. So, improving the sales process, trying to be faster on leads that come in, and then like some low-hanging fruit with content marketing and Google reviews and pay-per-click and things like that.
Got it. And how big are, I guess, most of these clients of yours, and what kind of businesses do they generally run?
Generally service-based businesses. So like two buckets, like home services, kind of blue collar trades. And then the other would be professional services, like consulting, web
Yeah.
designers, folks like that. Um, Most are between 1 to 5 million in revenue. We have some that are like as small as 200K in revenue, and then we have some that are like 20 million, but the majority of our clients are kind of that 1 to 5 million in revenue range.
And do you work with a lot of folks who, searchers who go buy business and then kind of change up
Yeah.
accounting firms as well?
Yeah, that's been one thing that's like been awesome is like just myself being a searcher. I've kind of been in that community. And then maybe half of our new clients are searchers who are buying a business, and we'll, meet them when they're under LOI and then work with them, to take over all their accounting and tax. And it's really fun too, because oftentimes they appreciate good financials as like a searcher. And we're also modernizing the tech stack a lot. So the seller probably was on like QuickBooks Desktop or didn't have good, clean financials and didn't have a CRM. And so we can say like, here's the CRMs we recommend based on your industry. We know how to, integrate with QuickBooks Online. We know these other bill pay tools that can be really good for you. And even payroll, like some small businesses still have really archaic timekeeping and payroll processes, and we're able to like modernize that and save them time and save them money on that front. So it's
That
fun in that way.
And you said that I guess, a lot of folks listening who are going to be listening to this are, buying businesses and thinking about, what do I do on the accounting side? Um, would you recommend them engage an accounting firm like yours, sort of while they're in diligence, while they're like, at what stage does it make sense to really start engaging? And
So
like, folks
we,
are probably sensitive about, how much money they're spending too before they
yeah,
actually close a deal. So,
yeah. So we've recently started doing quality of earnings and due diligence. So
oh,
um,
okay.
we've got a number of projects under our belt now. We just haven't like started screaming that from the rooftop. So if you're listening to this, we can help with QV. And then you know, post close, we do like all the accounting and tax. So I would say if you're sending LOIs, like I'm happy to chat with them in that stage. And then like once you get one under LOI, then we can engage with people. Um, yeah.
And how long does it actually take to sort of transfer accounting systems from, or like go from, the seller's old, whatever they did to
Yeah.
your way of doing things, you generally
Yeah. So
find?
that's a mistake we see a lot where really it should you're ripping the band-aid on day one because I don't know, 98% of these deals are asset sales. And so
Yep.
you need to open up a new QuickBooks Online file and stand up a new balance sheet. And you're going to have a new bank account. So the last thing you want to do is like use the seller's old QuickBooks Online file because it's just going to create a mess and then they can't file their tax return and then you're going to have all this bad data. So we usually like to open up the QuickBooks Online file a few days before they close, start to get it integrated with their bank account so that those first couple of weeks is one less thing for them to worry about. Um, so yeah, that's the way we prefer to do it. And then even sometimes with deal structures as a stock sale, we'll open up a new QuickBooks Online file just so that it's a cleaner um, data set.
No, that makes a lot of sense. I guess going back to your own search and acquisition journey, what did the transition look like when you bought, this account, your first accounting firm, especially where, you hadn't come from, you're not a CPA, obviously, but what did that transition look like? And what did your role look like then and now?
Yeah, it was kind of funny because I closed December 31st. So it was like right before tax season. And so we went right into like busy season and they're like, we don't change anything. We don't
Yeah.
do anything. We don't hire any new people during tax season. So it kind of forced me to like observe and like see what was going on a lot. And the first thing that I took over was our sales and marketing, and then I took over our hiring. So like right after tax season, I was like, okay, we gotta like improve some of this tech and like upgrade our email and like upgrade our tech with our internal systems. And we're a little bit understaffed. So I went on the hiring right away. Um, and in taking over the sales process, you really start to learn like, okay, what are the ways that we structure our bookkeeping engagements? What are the questions that I need to ask in terms of like the entity type that they are? How do we do tax planning? Like, how do we build our fees? So that really tells you a lot about like, if you're going to do a fixed monthly fee, you better like understand the client and what you're getting into. So that helped me a lot. And I was like self-implementing EOS. So there was just a lot of like moving parts that first year, and I closed those two other deals within the first year, which I don't
Oh,
recommend. But
wow.
yeah, that was a lot in the first 12 months. So um,
So like three deals in basically a year, effectively.
yeah, yeah, yeah,
That's wild.
yeah.
That's wild. And how did all the employees take, I often hear like with CPA firms, it's hard to sort of transition those relationships. But how did, everyone sort of handle that transition with you coming in and not sort of coming from the space?
So the on the first one, like it went way better than I thought on the client side. Like um we didn't lose any client relationships on the first one because of the transition. Like we had a couple of businesses close or sell, but like can't do anything about that. And
Right.
then some of the staff, they were kind of like feeling me out. And as much as I could, I just tried to like build a relationship and build trust really quickly and like create some wins. Like, oh, you want to work from home? You don't have a dual monitor? Like you want a stand-up desk? Like, sure. Like, and I improved their health insurance and I try to give them more support and like just did everything I can to try to help make their job easier. But it's still accountants don't like change. And so there were still times where I was like, we're going to implement this new software and like we're going to have all these new clients coming in. So um, it's a tough balance of like figuring out like how much you want to change the business versus like not, you know,
Right.
upset your current team too much. But yeah.
And what does your role look like now, since you're now, a couple years in? How has your role evolved over time? Have you hired some additional folks to, help you manage the team? Yeah,
Yeah, so our team now is like 35 people. So now I kind of like I lead our leaders. I handle sales and marketing still. I still do a lot of the hiring. Um, and then I do some billable consulting work myself. That's maybe like 20% of my time. Um, so those are kind of the hats that I wear these days. But yeah,
and when do
still
you
like
sort
working a lot, like I don't
yeah,
know. It's
and when do you jump in to do sort of consulting? When does that sort of happen?
so I two ways. Like searchers, I help them like with thinking through deals, reviewing deals, structuring deals, and then people that are buying businesses. It's kind of like a mix of like I don't know, like small business coaching slash fractional CFO type consulting work that I do, helping them like budgeting, pricing analysis, go forward, go to market strategy, things like that.
Got it. That makes sense. And I'm curious, you work with a lot of searchers, or folks that have, bought a business and now are, working with you as you as their sort of accounting firm. You've probably seen a lot of the common mistakes that go wrong during this process. What do you think are some of the things, people most commonly do wrong?
Yeah, I think one thing that searchers get wrong often is they try to look for the perfect deal, or they'll get a sim and they'll overanalyze the sim. So one thing I tell searchers, I'm like, anything that looks halfway interesting, like get on a seller call. Like
100%.
get on a seller call because I've had deals that I thought were 9 out of 10. And I get on the seller call, and I'm like, I don't like that person. Like, and then it's a 2 out of 10, right? And vice versa. Like, I think it's a 4 out of 10. I get on the call and I'm like, oh, this is a good business. Like, you just have a shitty broker. And things need to like pencil financially and like you need to do your due diligence. But I think you'll learn so much on like a 20-minute intro call in your gut. And like that'll tell you more than getting a sim and like, oh, I've never heard of elevator repair. Let me go analyze all the macro tailwinds of elevator repair and like, go investigate this for 3 weeks. Well, guess what? Like if that was a good deal, like it's gone. So
Yep.
I think that seller call tells you a lot with your gut. And if it's a listed by a broker, you have to move fast and get them to like you. And in all of these, like you're going to deal with the seller a lot. Like you have to like get that gut feeling of like, are they really selling for the reasons that they said? And like, could I get along with this person in a transition? And so that would be one of the big mistakes is like, I think searchers need to go for a seller call faster. And they also need to realize that like there's no perfect deals. Um, those would probably be like, I don't know, the big two that I think
Yeah,
search.
no, I totally agree. There's some deals that we've looked at where even on the sim, like, it says certain things, you talk to the seller, it's a completely different thing. And you just learn so much more by actually talking to the person who's running the business. It's
Yeah,
crazy.
yeah.
Yeah, that's interesting. Anything else, I guess, that you
I
see
think the
people
other
do
thing
wrong?
that like these days, I think, the Harvard Business Review and some of the other, um, I don't know, like books or courses out there are like buy as big as you can, right? Like you got to be over 750K of EBITDA. And I think there's some things that are accurate in that, but there's a good sweet spot of like, I don't know, like 300K to 700K of SDE. There's some good solid businesses in there still, and you're gonna have a lot less competition. And if your strengths are like sales and marketing, like you can buy that smaller business and like you can take it from, you know, 2 million in revenue to like 3, 4 million in revenue, like within 12 to 18 months. And you might have still been searching for 2 years. And
Yeah.
I think a lot of people who bought multiple businesses like me have felt like once you buy that first one, like it's so much easier to buy multiple that I think people should be open-minded to like maybe coming down a little bit on that range of like 300 to 700K of SDE is like can still sometimes be a good place to look or find a solid business, you know.
Yeah, no, definitely. I'm curious, going back to your deal, how did you run diligence on your first deal versus your second and third?
So I'll give you a long answer. I had a different firm that I thought was going to close like 6 months prior, and it fell apart at the very end. And I really wanted to find a deal before the next tax season. So when I was getting towards the fall, and I was like, crap, I'm not going to be able to find a firm. I'd also honed my senses a lot for like what I was looking for. So once I found Appletree, I was like, hey, this is a really good one. Um, I had a friend that owned a bookkeeping business, and I had him review it with me, and then um, I didn't pay for like a full blown quality of earnings then because I didn't really like understand or know what that was. So um, I had a friend review the financials with me and review the tax return, but I honestly like this was 3 years ago. I didn't know like what QV was, you know.
And can
Uh,
you tell it just for the audience, can you sort of explain what equality of earnings is and why maybe you should have gotten one?
yeah, yeah, I definitely think you should get one because um, a quality of earnings report is basically you're having somebody research and make sure that the financial statements and the tax return they say is what it actually is. So like if they say that the business had 800K of profit, like we're going to recreate the financial statements and go through the bank statements for the last 12 or 24 months and say like, yes, that actually happened. Or you'll look at the add backs, right? If they're like saying this was a one-time expense and they want to add it back to the SDE, you're going in and verifying that. You can think of it as like a home inspection, right? Like if you're going to go buy a house, you're going to want a home inspection to make sure like you're not getting sold like a pile of crap. So
I like that
so,
analogy.
yeah, that's what a Q of E is for a small business. And then you're also diligencing like, you know, are there legal issues hanging out there? Are there insurance claims hanging out there? Some of the people side and maybe the industry a little bit. So when I was diligencing, I looked at a lot of accounting firms, and then I had a buddy look at the financials with me and the tax return. Um, and that was it. And it was also just a lot of trust with the seller, so um, that's kind of what it looked like on my first one.
No, that makes sense. I guess, looking forward, sort of what's next for you? Do you see more acquisitions on the horizon? Do you see yourself buying, something outside of even the accounting firm space? Or is it more just about, continuing to grow the business? And I guess, is there sort of any intention of selling one day?
So from the start, the first firm I bought was doing 1.2 million in revenue, and my like 5 year goal was like get it up to 5 million in revenue top line, and it's hopefully like 20% cash flow, and then I'd have the accounting firm, and then try to start buying other types of small businesses. So that's still my North Star is like get to 5 million in revenue and then come up for air and then decide like, do I want to try to start buying other industries or um, maybe I just invest in searcher deals or like put my foot on the gas and go for 10 million top line. So TBD, like we're a little bit ahead of schedule on that of
That's
like what
great.
our goal was. Yeah. So um, that's really my focus still is like continue to improve our processes and get the firm to 5 million and like have a really good team and then decide like if I want to make acquisitions in other industries or like push and go to the next goal from there.
No, that
So
makes sense. I guess in the meantime, are there other industries that have caught your eye?
yeah, so the other big part of buying an accounting firm was that we'd have our client base where we'd be the first to know if they'd want to sell, and we'd
It's
also
very
know
smart.
we're buying. So there have been some clients that have approached us, and there's some like I would say B2B services is probably like the broad term, whether that's like moving company, commercial landscaping, like SaaS, like those would be the general categories that I'd probably be interested in. But I also know just how hard it is to go buy a business and like go through integration and figure it out. So we'll see if I am dumb enough or have the energy to do that again in a couple of years. I don't know.
No, I love that. And did you have a partner going into this at all, or did you just do this all by yourself?
Yeah.
Would you, how
And
was
I,
that, doing this by yourself? Because
so
I
that's the
see a
other
lot
thing,
of
like,
people buying businesses with partners, but I think it's the minority, right, to go into this alone. So I'm curious to learn
so
more about
when
that.
I did small business coaching and consulting, 80% of the partners that I worked with were like dysfunctional. Like, and I was just like, I don't want to have a partner because like, you just look at it mathematically, like more than likely, like, and I think there are some partnerships that are magical where it's like they totally complement each other and kick ass. But I knew I didn't want to have partners, and I also like I didn't want investors. So that was just me at the time. I know, and all I knew of back then was a traditional search model, and I was like, I don't 25%, like that's not exciting. I didn't I didn't know about the model now where you can like give up 10 to 20% equity and like, your investors get the pref and the step up, but you can still control 70 to 80% of the business. Like I just didn't know about that structure back then. So nowadays, like I'd be open to something like that. But when I was searching, I was like, no, I want to own the whole thing. And like, I don't want to, I don't want to have a partner. So um, it's just been me up to this point.
That's great. I guess one, last question is, is buying a business everything you expected it to be? Or buying three businesses now?
It's, I like to think that I'm like a gritty, resilient person. And I was like, knowing that I was in for like sleepless nights and the stress. But I think the big thing is like you just can't turn off. Like I have three young kids, my wife works, and like I'm always thinking about it. Like every single night I wake up at 3 a.m. like and my brain is like, hey, remember to send that email, or like, hey, follow up with that client, or like, just like it's endless. Like the that feeling of like always having to be on and like the stress. But the good news is like I would do it again 10 times out of 10. And I'm happy to be like doing the work that we do and like making an impact that we do for our clients and controlling my own like destiny. And um, I think the other thing is there's way more opportunity, like that's the other thing is I'm like working really hard because I just see like how much opportunity there is in accounting right now that like, okay, this is my window. I'm gonna run really hard and try to seize it. So but
No, definitely.
like if you're searching, like I can't underestimate like this shit is really, really hard just to find the business. And then once you close, then you gotta do the rest of the work to figure out what the hell you're doing and operate it and like, you know, make a buck. So
Yeah. I guess any final words of wisdom, especially for the first time buyers out there?
just know that search is a marathon and like you're gonna have deals die and like, you have to just be consistent and grind away and like you'll find deals out there. And I mean, the community now is just so amazing of like people like you and people that are doing boot camps and like conferences and like how many people there are on Twitter that are just so friendly and open. Like, if you are looking at like, I don't know, some like weird commercial printing niche, I'm sure there's somebody else that can connect you with somebody that can give you insight on like what it's like to be in that industry. And then once you close, like you should join a peer group because the peer group can really like help you save a lot of time and not make mistakes. And you know,
Where do you recommend finding a peer group to join?
so I'm in an industry one, and then I'm also in like a agnostic one. So there's an accounting association that I'm in. I'm in a couple, and then I'm in Hampton, and
Oh
I'm in
yeah.
Scale Path. So I'm in both of those, and like I learn a lot from those, and I can talk to other operators and like cry and vent and like get inspiration. So I think like the peer group is like immensely valuable to you know keep your head on straight.
No, definitely. I completely agree with that. Well, Patrick, thank you again. If people want to reach out, where can they find you?
Yeah, I'm pretty active on Twitter. So Patrick Dichter, last name Dichter. You can find us if you're looking for accounting, QB, all that. Appletree Business Services in the Google machine. And I appreciate having me on. I love your Twitter and all you do. And I love following your newsletter and the deals that you put in there. And it's great to finally come on and chat.
Yeah. Well, thank you again, Patrick. I'm sure everyone is going to really enjoy this.